are markets getting carried away with just phase one of these trade talks, or trade deal, I should say, or is it really now time to position for progress?
I think the best thing you can hope for from this change in tone on the trade negotiations is that this is the end of the period of rising uncertainty. And from here, uncertainty starts to decline. It won't happen in a day, it won't happen in a month, but the trend of rising uncertainty, which was causing a lot of problems for global capex, that could start to go down. And global capex, if you remember, has been by far the biggest driver of downside in the global economy. You know, you look at the trade numbers, the tariff numbers per se, the dollar amounts don't add up to a lot, but it's the impact on business confidence that has cratered equities in Asia. And if that starts to improve, then you get a very, very good picture. I mean, this is still yet to be seen whether that's actually the outcome that we'll get. Of course, this is, like you say, just the phase one of the negotiations. Then we get into phase two and phase three. But I do sense that from the U.S. perspective, there is a conscious attempt to move away from tariffs and into other areas. So we've seen Trump talk about technological competition. We've seen some talks about restricting financial capital flows. So that, from Trump's perspective, gives him the same political points, if not more, but without the same kind of economic damage.
How much fuel do you think this rally has then? I mean, in terms of, I know it's very hard to put a timetable to this, right?
You want specific numbers. I think a 1% plus move today is very reasonable.
Right.
But looking at our year-end MSCI Asia ex Japan target is still 650,
right,
which is about 4 to 5% higher from current levels. So it's not the change of the world. So we still have a lot of things to assess before we make further decisions on upgrading earnings forecast for 2020, for example. Right now, if you look, the good thing that's happening right now is that it's not just the trade that's changing, right? You've had positive news on Brexit, but much more importantly, what we're seeing is that earnings in Asia seem to be turning around. And this isn't just an India story, where obviously with the tax cuts there's been a lot of change, but across the board, most importantly, we've seen memory markets, margins on the memory companies starting to bottom out. Samsung's results last week were a good sign of that. And if we start to see that, that's been one big pain point for Asian earnings, right? And if that goes away, that's great. Capex is another story. If that goes away, that's great. Then you start to see all the policy easing that's been taking place all year, and the impacts are being felt now. Earnings turning around, that will make us much more optimistic.
Mixo, does the rotation into value stocks, does that continue?
Yeah, so we've been positive on value, looking for this rotation to happen since like the third week of August. The reasoning behind that at that point was that positioning had become extremely light in Asia, and especially in value stocks. And if you look historically, that has typically tended to promote value rallies. And of course, at that time, valuations in value stocks and just looking at the momentum indicators were very, very extreme. So we thought that there should be some sort of a rally. It happened in the first couple of weeks of September, then it kind of faded away. And the main reason, to my mind, for that fade was simply the fact that we got a patch of very, very bad data, starting with China's macro data, but also going into the U.S. ISM numbers. And now we're starting to see conditions improve again. So the positioning is still quite light. Value stocks are still quite inexpensive. The momentum or the technical indicators are a little bit weaker, but we're starting to see bond yields pick up again. Yield curves are steepening again. And all of these conditions really, really add up to a resumption of the value rally. So with this trade news over the last weekend, we do think that this value rally will resume. And if you look at our tactical ideas, so we run a portfolio which has a core component and a tactical component. The tactical component is very much biased towards value stocks at this point.